A very warm welcome to everyone, participants and fellow insolvency professionals. Good evening. On behalf of IPNet East Region, it is my pleasure to welcome you all to today's webinar on the theme Income Tax, GST and IBC, who has the upper hand. We're truly honored to have with us two distinguished experts who will share their deep insights on this important subject. CA Sushil Goyal, who will speak on GST in the context of IBC, and Mr. Ram Ratan Modi, who will speak on income tax in the context of IBC. Your presence here, whether as an experienced IP or as a first-time attendee, adds great value to this session and strengthens our learning community. As many of you know, today's event is a part of a long-standing tradition of knowledge exchange under the banner of IPNet, which is the National Network for Insolvency Professionals. This is the 47th webinar in our continuing series, reflecting our commitment to empowering IPs through shared expertise and collaborative learning. Without further delay, nonetheless, please let us welcome our new IPNet East committee members. We will start with Mr. Sandeep Singh. Request you to please introduce yourself, sir.
Good afternoon, everyone. Sandeep Singh this side from Calcutta. I'm glad to be a part of this IPNet team and wishing you all a very happy Janmashtami and a very happy Independence Day.
Thank you, Sandeep.
Thank you, sir. Dr. Tavinder Singh Arora. I think he's still to join. Dr. Taidi has joined, sir. Request you to please introduce yourself. Mr. Sanjeev Goyal and Mr. Uttam Agarwal. I saw Mr. Uttam Agarwal, sir.
Yeah, ma'am. Good evening and happy Independence Day. I have actually joined last day also and introduced myself also. I am from Calcutta, IP, and handling right now 3 assignments of personal guarantors.
Thank you, sir.
Thank you so much, sir.
Welcome.
With this, it's now my privilege to invite Mr. Rajiv Kumar Agarwal, member of the National Executive Committee and Regional Head of IPNet East, to deliver the formal welcome address. Rajiv, sir, over to you.
Thank you, Namita. Good evening, everyone. It gives me immense pleasure to welcome you to the 47th edition of the IPNet webinar on the theme Income Tax, GST and IBC, who has the upper hand. We are honored to have with us two eminent experts who will share their valuable insights today. CA Sushil Goyal, ex-Central Council member of ICI, who will speak on GST in the context of IBC. Mr. Ram Ratan Modi, Insolvency Professional, who will speak on income tax in the context of IBC. A special word of appreciation goes to Sri Ashish Makhija sir, President of IPNet, whose vision and leadership have been instrumental in building this vibrant and ever-growing professional community. For those who are not yet a part of IPNet, this is the perfect time to join our dynamic network. The membership link has been posted in the chat and we look forward to welcoming you to our family. Over the years, IPNet has grown into a powerful knowledge-sharing platform for insolvency professionals across India, with a mission to provide expert-led webinars, study circles, and practical workshops, offer hands-on guidance for tracking complex IBC issues, maintain an exclusive digital portal with resources, updates, and support for members. To our existing members, thank you for your continued trust and active participation. To those attending for the first time, a warm welcome. We encourage you to explore the many opportunities and benefits that IPNet offers. Thank you for joining us this evening. Let's begin with promise to be an insightful and thought-provoking session. Thank you. Namata, please continue.
Yes, I'll just play the IPNet video and the website video for everybody's knowledge.
In the fast-evolving world of insolvency and bankruptcy, professionals need more than just knowledge. They need a strong network, continuous support, and a unified voice. As the challenges of the insolvency profession grow, so does the need for a platform where professionals can come together, share their experiences, and find collective solutions. That's why IPNet was formed. Promoted by Transition, IPNet is more than just a network. It's a mission to unite insolvency professionals across India, empowering them with the tools, knowledge, strong leadership, and community support they need to excel. Our purpose is simple: to create a cohesive community of insolvency professionals that stands strong together, advocates for their interests, and drives excellence in every aspect of the profession. At IPNet, we believe in continuous learning and collaboration. Our activities are designed to ensure that every member stays ahead in their field, from specialized study groups that dive deep into critical topics like CIRP, compliances, and many more, to webinars and workshops that bring the latest insights right to your screen. IPNet is your gateway to professional growth. Backed by Transition, a leader in insolvency training and resources, IPNet is committed to promoting the interests of insolvency professionals. Our goal is to ensure that every IP, no matter where they are, has access to the best resources, strong leadership, and a network that truly understands their needs. Join us in this mission to build a stronger, smarter, and more connected community of insolvency professionals. Together, we can overcome challenges, shape the future of the profession, and make a lasting impact. IPNet, National Network for Insolvency Professionals in India.
This was a short video showcasing IPNet's purpose, initiatives, and contributions. Now I request Mr. Sandeep Singh to introduce our speaker, Mr. Sushil Goel, ex-Central Council member of ICAI.
Good afternoon, everyone. CA Sushil Kumar Goel is a distinguished chartered accountant with over 28 years of expertise in indirect taxation, including service tax and GST. A commerce graduate from Tinsukia Law College, Dibrugarh University, Assam, and a law graduate from Kingston Law College, West Bengal State University. He has an exemplary academic record and a proven track record in professional, social, and business spheres. He has been providing GST advisory, compliance, certification, and litigation support since its inception, which is 2017, and has served clients across all sectors. Prior to GST, he was a leading expert in service tax since 1997, representing clients up to CIRP level. An accomplished author, he has published 5 widely appreciated GST guides and a decade-long 10th edition service tax guide, reviewed by ICAI as a useful book and very good source of reference. He is the editor of the monthly GST bulletin Tax Talk with over 30,000 readers and has circulated more than 2050 service tax GST tips recognized by Limca Book of Records. Mr. Goel has held key leadership roles, including chairman of the GST and Indirect Tax Committee of ICAI, vice president of the Customs Excise Service Tax Bar Association, and chairman of the GST and Indirect Tax Council of the Merchant Chamber of Commerce and Industry. He has represented ICAI and several chambers before the Finance Ministry in pre-budget and policy consultations. As a South after speaker and faculty, he has delivered over 900 lectures across India and internationally, including at forums organized by World Bank Group, IFSC, and World Customs Organization. He regularly contributes articles to leading professional journal and trains officers at Nasin Professional at ICAI and student at St. Xavier's College, Kolkata. His professional journey is marked by deep technical knowledge, thought leadership, and significant contributions to policy discussions, capacity building, and awareness in the field of indirect taxation. I welcome Mr. Sushil Goel to take the session.
Thank you very much for a nice presentation, Mr. Sandeep. I am indeed pleased to hear so much you have spoken about me, and I will try to justify the purpose for which I am here. And I am pretty sure that good number of new things, all the IPs and IRPs will be knowing today about the GST, because all we understand that IBC is the upper hand. So GST is not having so much power the IBC is having, but it doesn't mean that we can ignore GST. GST have a specific compliance requirement, a number of places. So let me start with my presentations. IBC and GST interplay. Basically, two path-breaking reforms in the country has taken place, but first is in 2016, when the Insolvency and Bankruptcy Code were announced, or rather it should be become effective. In 2017, Goods and Service Tax Act has been enacted and made effective, implemented from 1st July 2017. With this background, I have divided the discussion in two parts. First is the period under IBC and GST applicability. What are the GST provisions related to the IBC? Then we will discuss whether who is having upper hand and how they are having. So period under IBC has 4 phases of the CD. I have divided it, and I think all my participants will agree to this, that there are 4 phases. If somebody have some contrary view, he is welcome to contradict also. What are the 4 phases? First phase is the pre-CIRP period, that is also having GST implications, and it is number of time it is impacting the RP during his role, whatever role he is going to play. I think now I am audible. Uttamji, I think he wanted me to be a little louder, so now I'm using headphone.
Yes, sir.
So thank you, Uttamji. These 4 phases are pre-CIRP period, the period which is before the CIRP, CIRP is period which is not required to be complied with or not required to be looked after by the IP, the insolvency professionals, but this period always hampers the working of the professionals and the impacting the day-to-day working which is they are undertaking after this period, after they have taken over. So we must discuss this, and then this is the CIRP period. The person who is handling this period is the fully responsible for compliance of the law, for compliance of the GST requirements, and we will see what are the requirements. And there are some special provisions, and sometimes this resolution plan has failed, and then we go for liquidation, and the liquidation period is also what will be the GST implications. And last is the post-CIRP period. So the period when it is over, the IP cannot simply, the insolvency professional cannot simply exit from the role and say goodbye to the CD, the corporate debtors. They have to perform certain activities before they are saying goodbye. In GST, whatever I'm going to discuss is related to GST. I'm not an expert of the IBC. I'm rather not a student of the IBC. I'm a student of GST. So please pardon me if some of the wrong terminology has been used by me related to this IBC. Let me start with the pre-CIRP period. All we know that this clean slate concept is there, and the IBC emphasized the doctrine of the clean slate, and it is since inception, it is very clear that once the resolution plan is approved by the Honorable NCLT, even if the same results in extinguished claims of creditor, including statutory dues, the same be binding and accepted by all stakeholders, including the statutory authorities. During this period, the GST department in the earlier times of the IBC, when the IBC came in 2016, then in 2017, GST has been introduced. The department was not much aware about the IBC, and they never thought that there is a law exists in the country which is more powerful than them. They never thought that their money, which is due according to them, can be challenged, and they have to go and ask for the money, and they have to file a claim. So this was not known to them, and they have not filed the claim in number of cases, and the liability has been extinguished. This has happened in number of cases, but now I think these cases are slowly reducing, and department is properly taking care and filing their claims as and when required. And it is confirmed by the Honorable Supreme Court in the case of Ghanshyam Misra and Sons that unless they file a claim, the corporate debtor is not responsible, or the IP is not responsible for their dues. So this is well-known fact that most corporate debtors were in default of either GST returns or dues for the pre-CRP period, and consequently the GST return of the CRP period could not be filed. This was also one of the challenge before the IP, that the GST, which is required sequential filing of the returns. Unless the return of the one period is not filed, it cannot be filed for the next period. And most of these corporate debtors were in default, either for not paying the taxes or not filing the return. So this was the challenge before them. And although they are not liable to do so, but they were facing difficulties in doing their part of job. So section 16(2) of the CGST Act says where recipient fails to pay the supplier within 180 days, that is most of the case it was happened, other than and in earlier management has claimed the credit, then such cases, since the earlier credit taken or acts of management related to the pre-CRP dates, the amount can only become a claim on the corporate debtor as part of the operational debt. So this is always in discussion. If the earlier period taxes has not been deposited, what will happen to that? Unless they file the claim, nothing can be happen. It is confirmed by the judgment of the Rajasthan versus State of Rajasthan versus Ultratech Cement. Extensively deals with the issues pre-liability and whether they can be recovered from the resolutions applicant of the corporate debtor. Honorable Rajasthan High Court held that pre-CRP liability are frozen, so nothing to be worried. So pre-CRP period, let me elaborate little more, that if they have regularly filed the return, then the burden is less, then the problem is less. But if they have not filed the return, then the person who is now taking care of the organization in the CRP period, he is facing difficulties. So the government come out with the special procedures and procedures to be complied in GST by the RP or IRP. Basically, they says, first and foremost, this is the confirmed statement that the RP or IRP is responsible for the management of the CD and its assets to continue to run the business operation of the said entity as a going concern till the insolvency proceeding is over. And friends, whenever he is complying these requirements, taking this role of the management and doing the compliance, he also required to do the GST compliance for his period, and he is fully responsible. And since in number of cases, the registration was not working because he cannot file the return unless the returns are sequentially filed. So the guidance which is received from the CBIC by way of notifications, that is 11/2020, which and confirmed by the circular 134 and later on 138, notified that such CDs shall be treated as distinct person. Let me clarify what is distinct person. Distinct person in GST is basically one person having more than one registration under the same pen is known as distinct person. So they say the PCRP period, one GST registration is in existence, and if you cannot continue with that registration because their dues are pending or the returns are not filed up to date, then this RP or IRP should go for a new registration as a distinct person, and a special procedure regarding registration, filing, return, and availing ITC has been announced by these circulars. In case of registration, they say the said class of persons shall, with effect from the date of appointment of IRP or RP, be treated as distinct person of the corporate debtor, and CDs shall be liable to take new registration each of the state. Mind it, in each of the state or union territory where CD was registered earlier within 30 days. So this says as soon as this new procedure has been announced, within 30 days you go for a new registration. And this is equally applicable in present scenario also, that whenever somebody is taking over as a IRP or RP, he must apply for a new registration if he is not able to continue with the existing registration. And if he is able to continue with the existing registration, then he must go for a change in authorized signatories. He can approach to the department, get hold of the old registration, and if the returns are up to date filed, he will not be liable for any liabilities. But since the sequential filing of returns are mandatory in GST, so if returns are up to date, then he can go for the change in the authorized signatory, and his liability will be from the date he is getting appointment. Prior period, he will not be responsible for any liability. But it is to my suggestion, I always suggest that you go for a new registration, better not to carry over the legacy, because whenever some demand will come, the GST officers are not much acquainted with the IBC laws, and they may go for some sort of demands for the past period. They will issue demands. Whenever the demands will be issued, it will issue in the same GSTN number. So it is always advisable for all the IRP and RP to apply for a fresh registration as a distinct person. And filing of returns, as you are getting new registration, you can go for filing of the first return. This was basically transitional provisions when people were not aware and the government has not announced how to move away from the earlier registration and take the new registration. So they have prescribed the procedure that if somebody has taken in 2020, prior to 2020, then he can take the new registration and comply the entire period as their first return. Section 40 of the CGSTX allows us to file the first return in which we can take the figures which is prior to our registration. So they have allowed this particular provision. Input tax credit also said the since received since his appointment for the past period, if some credit is there, he has not taken and he is not able to file the return, that was also permitted. So for whoever taking the new registration, it is not necessary to go by this particular provision. Somebody is saying, Vaisali is saying, if the CD is not maintaining registered office under the Companies Act, the new registration cannot be done in the absence of proof of address. CD can, I think, if they are not maintaining the registered office, and the IRP can give his address as a distinct person from where if he is running, why he is required a registration. First try to understand. If he is running some business, then only he required a registration. Otherwise, he is not required a registration. So if he is running some business, then he is from wherever he is running that particular business of the CD, he must take registration for that particular address. If CD does not have turnover, RP should not be required to get new registration. Yes, if he is not running the business, only he is waiting for the insolvency resolutions to be taken over and not required to registration. But the major problem in this particular GST is the reverse charge mechanism. Even if you are not making any supplies, not doing any business, not selling any goods or providing any services, still you are receiving some services for which you may require to pay GST under reverse charge. So please mind it. But one thing I must say regarding the advocate fees, which is the advocate fees is under reverse charge, but an exemption has been given if that particular CD is not taken new registration and their turnover is less than the prescribed limit of 20 lakh. Then they are not required to pay GST on the advocate fees under reverse charge. If the turnover is less than 20 lakh, let me repeat for the proper understanding. If the turnover is less than 20 lakh, means no registration, no business they are doing, so no turnover. So they can continue with the without payment of the GST on the advocate fees. Please mind it, the reverse charge on advocate fees are only covered here. Other reverse charge like the rent a cab, if you are liable or you are taking services of goods transport agencies, these are not accepted. So that we must keep in mind. So IRP or RP shall be the first return I have discussed since his appointment. Even bearing the GST number, the one specific things has been if somebody, what about the security services? Security services, if provided by a corporate, then they are charging under forward charge. So nothing to worry, but if they are not done by them, then definitely reverse charge, we are liable to pay tax on that. This even bearing the GST number of erstwhile registered persons shall be subject to the condition of the said act and rules thereunder. So particular this situation has been arised that since the IRP or RP has been guided to take a new registration under the same pen. So they have received certain supplies. The ITC was coming in the earlier registration. Even they were allowed to take the credit in the new registration, although the invoices were having in the mentioning the old registration number or coming in 2A of the old registration. Nothing to worry. This particular transitional period they have allowed that you can take the credit, even the GST number of the earlier period has been mentioned. We kindly request all the participants to keep their videos during this. Okay, fine. Thank you. The provision of section 16(4), which says that you must take the credit within the time period prescribed of that is the earlier it was the due date of filing of return for the September month. Now it is 30th November, was also has been done away with for this particular provisions. Registered person who is receiving supplies from the said class of persons shall for the period of date of appointment to the RP till the date of registrations are required to in this notification of 30 days from the date of notification, whichever is earlier. These all transitional provisions are given here. And they were allowed to take the credit without the restriction of section 16(4) or the rules 364 for this particular period. That is during the CIRP period. This notification 11/2020 state that any amount deposited in case ledger of the erstwhile GST number from the date of his appointment to the date of registration shall be available for refund. If suppose the clarity was not there and somebody has deposited the money in the old GST number, so they were required to, they were allowed to take the refund that money. NCLT allows manual filing of GST return and e-way bill generation facility to the liquidator. This particular case scenario, the NCLT Mumbai bench was allowed, but it is not usually followed and not allowed in other cases. So it was case specific, but it is allowed to file the manual return. But after this, the process has been announced, so one can comply the requirement by following the process. So during the CIRP period, we already understand, and liquidation period. So we understand that the registration plan has failed and the liquidation period. During the liquidation period, we must understand. And before that, discussing the liquidation period, suppose the resolution process successfully done, then what you are going to do with the CD, the corporate debtors? Either you are going to transfer the as a unit as a going concern, or you will not you will transfer the unit as a going concern. So if you transfer the going unit as a going concern, please note it down. And what I understand that number of persons are not following these rules, which is prescribed in GST. That if you are selling a going concern, GST is not applicable, no doubt on that. But you have to comply with the GST requirement. That is, first, it must be along with the liability related to that particular assets. Although in case of IBC, these liabilities are zero. So zero liability is also to be transferred. So we must have a chartered accountant or cost accountant certificate certifying this, that the liability related to this particular unit has also been taken over by the new entity. And this required a chartered accountant certificate. And moreover, you are required to file a form ITC 02. ITC 02 is the form which is a mandatory form in all transactions. In all the transactions, it must be filed, which is through this ITC 02 form only we can submit the chartered accountant certificate to the GST department. So that way it is become mandatory, that unless you file the ITC 02 form, although purpose of the, sorry, I was not started the presentation, nothing to worry. I was talking about the past, the CIRP period only. Suppose you have successfully passed the resolution plan, then you are, as a going concern, you are transferring the units. Then what you should do? So you must file the form ITC 02. ITC 02 form, which required accompanied by a chartered accountant certificate. Chartered accountant certificate is or a cost accountant certificate, which confirms that the liability related to this unit has also been taken over. So no liability remains. The liability is also taken over. That is the confirmation. Then only you are allowed to take the forgo the GST liability. Otherwise, the sale of unit is also liable for GST. So it is exemption has been provided only on the condition based that the liability is also taken over. So you need a certificate from a chartered accountant that liability is also taken over. And this liability, once taken over, is also informed to the department through ITC 02 form. And basically, why we're talking about basically ITC 02 form is a form through which you will transfer the credit to the new unit. Suppose there is some credit is lying on your GST portal, that is the electronic credit ledger. You have some credit and you have to transfer this credit. Transfer this credit to the new unit. That is also a mandatory requirement. For transferring this credit, you need the ITC 02 form. That the common understanding that only for that purpose we require. But to my understanding, for all ongoing transactions, all transactions where the units has been transferred as a going concern, we need to file ITC 02 along with the chartered accountant certificate. Now in liquidation period, where sale of assets by the liquidator amount to supply under GST, yes, it is supply. Because the definition of the supply, the scope of supply, which is given in section 7, which have 8 forms of the supplies, are covered. This the sale, transfer, barter, exchange, license, rental, lease, or disposal made by or agreed to be made by for a consideration to all 8 forms as expressed in this section 7(1)(a). So if you are during the liquidation period, if you are selling each unit, each machinery separately, you are definitely liable for GST. Exemptions is only provided when you are selling it as a going concern. Then only due to that exemption is there. Otherwise, you are liable to pay GST. During the liquidation period, whatever assets you are selling, you are supposed to pay GST on that. So when legislature has deliberately restrained from adding these words, it is not permissible to include every akin transactions to the definition of supply. This was the basically comment from one of the sale of movable property. Important to note that in case of transfer of movable property, GST liability will attract. However, if the slump sale or the piecemeal sale, in such case, transfer of movable property, no GST will be applicable. So GST is not applicable on land and buildings. If you sell land and building, no GST is applicable. That is outside the preview of the GST. But if you are selling the movable properties, you are definitely liable for GST. Mr. Rajesh Kamath is writing something. Can this form be filed only after successful NCLT order past the resolution going concern sale or immediately after e-auctions? Basically, once the ownership is transferred, the exact transactions you people are aware, I'm not much aware about this and NCLT, significance of the NCLT order. Because if you sold out the unit, whether NCLT, you have to wait for the NCLT order, then the unit will be transferred or the unit is immediately transferred after the auction. So that is basically you have to understand. If unit is transferred to a particular person, NCLT order is the only confirmation, then you have to do on the transfer. Basically on transfer, when the owner property will be transferred, you have to comply with these provisions. And you confirm the status of GST reverse charge on advocate fees. Yes, GST is applicable on reverse charge, but what GST law is saying, let me take you little in detail. Section 22 of the GST Act says that every person who is having turnover more than 20 lakh or 40 lakh is liable for registration. Section 23 says person not required to take registration. Who are the persons who is not required to take registration? And section 24 says person required to mandatorily take the registration. And the one of the item in there is the reverse charge items. So person who is having reverse charge items is mandatorily required to take GST registration. But for this advocate fees, they have given exemption if the unit is having turnover less than the prescribed limit for registration under section 22. They are not required to take registration for the purpose of discharging GST on the advocate fees only. So if you other purpose you are liable, then it is fine. So moving next. Schedule 2, I think in the end we have time for the question answer. I will definitely try to take up all the questions. Schedule 2, as I said, we were discussing the land and building, which contain list of activity, treated as supply, section business is transferred. Serial number 4C, where any business is transferred as a going concern, such transfer does not amount to supply of goods. And exemptions for the supply of services has been given in the notification 11 by 2000, 12 by 2017. Therefore, since transactions will not be treated as supply of goods, GST would not be applicable. Sale of going concern, we all know 12 by 2012, services by way of transfer of a going concern as a whole or any independent part thereof is not liable for GST. The authority for advanced loading Karnataka in Rajshri Food, where the transfer of business as a going concern would be treated as supply under GST? If yes, whether it would be supply of goods or services. Referring the above serial number 4C. Personal liability of the director, section 88(3) of the CGST Act, which cast a joint and several liability on the directors of the private company in liquidation to pay the amount of unrecovered GST along with interest and penalty. The only savior provided for which can be protected such directors of the private company is providing that not recovery cannot be attributable to any gross negligence and misses or breach of duty on their part in relation to the affairs of the company. So that was the only savior. The same should be hold good since in case of resolution plans are approved and the claim are extinguished by the operation of the law, then same would deem to have been settled and should not be qualified as unrecovered tax anymore. That we must keep in mind. And lastly, after post-CIRP period, so while closing the deal, you must take care what is the company is continued to take over by the new management. And situation A, the earlier registration continues as no liability was unpaid. Towards the old GSTN, no other actions is required, only change in authorized signatory and the new management can take over the registration. Situation 2, IRP has taken a new registration, GSTN new registration by which they are getting new GSTN. No other action is required, only change in authorized signatory. In both the cases, the change in authorized signatory and the registration can be taken over. A company closed by selling all the assets and separately after paying GST on the sale proceed, whatever is applicable. Earlier registration continue as no liability was unpaid toward the old GST and surrender the registration and file Form 9, 9C and GST at 10. Once any person is, whether somebody is asking whether liquidator required to take registration, yes, if you are selling, who is the selling the assets? Somebody is selling the assets, liquidator is, I think, issuing the invoices for the sale of the assets. Whether the slump sale of old assets or any scrap by the transferee company to the transferor company, then also GST is applicable on such sale. Yes, sir. Sale of the scrap is also liable for GST. Anything in the country you are selling which is covered under GST is liable to. Situation 2, where RP has taken new registration, they must file the Form 9, 9C, surrender the registration certificate and file the GST at 10 for all the GSTians which wherever he has taken registration. The company is closed by selling all assets as a going concern through merger or otherwise. No GST is applicable on the sale proceed. File ITC 02 should be filed by the chartered accountant certificate with the chartered accountant certificate or cost accountant certificate. File 9C, surrender the registration certificate and file GST at 10. Repeat the same for all GST. And this is the post CIRP situations. And regarding the handling the pending litigations, please do not ignore, must ensure all notices getting delivered at the earlier addresses. Notices must be received and should not be ignored any notices. We must respond to each notice. Notice must be attended and responded in time. Claim refund of the pre-deposit payment under protest made at the time of filing of appeals. So this is still in dispute whether any amount has been deposited for filing the appeals, that is the known as pre-deposit, should be refunded to the person who is handling IRP or RP is eligible or liquidator is eligible to get this refund. The matter is pending, but the views are coming that we must get the refund. Orissa Manganese and Minerals Limited versus Commissioner of CGST CA Jamshedpur. They are saying that it is refundable. These all cases we know. GST department as the operational creditor, no doubt on this. GST department is the operational creditor. Definition of operational creditor, I should not show all of you. You are all expert. This operational creditor, section 520. Operational debts, you all know. 521. I must show you the GST provisions, the section. Can a tax authority initiate CIRP to recover dues? Yes, they can also do so. But they are not doing because the otherwise better mechanism is available to them under the GST law. So they never done it so far. Operational creditor. So since they are operational creditor, waterfall mechanism will be applicable or followed, then they will fall at the level 5. Regarding the section 82 of the CGST Act, which also confirmed that the Insolvency and Bankruptcy Code is will having the upper hand. Basically, it says so let me read out. It is an important section. Notwithstanding anything to the contrary contained in any law for the time being in force, save and otherwise provided in the Insolvency and Bankruptcy Code 2016, any amount payable by the taxable person or any other person on account of tax, interest, penalty, which he is liable to pay to the government, shall be a first charge on the property of such taxable person of such person. So all these has been examined in number of judgments. All you know, I'm not going to read these judgments. If anybody want to discuss, all these are confirmed that the NCLT held that the tax department will fall under the operational creditor. Recently, in the month of May also, one judgment has been announced, that is the Ahmedabad High Court, Ahmedabad NCLT order, that is the state officer versus the Binod T. Agarwal, decided by the NCLT Ahmedabad on 5th May 2025. Issue: can GST dues be treated as secured debt? Final verdict come, the GST department cannot be treated as secured debt creditors. It must be stand in the queue as a operational creditor. Distribution of assets will be done as per section 53, treating GST dues like CST and VAT. Conclusion: the case solidified jurisprudence where IBC and GST Act. CIRP must categorize tax dues strictly under the IBC norm. More litigation likely between government and department, and RP suggests strengthening inter-department communication during the CIRP. So thank you very much. This is the code I think I should use. The insolvency professionals, whenever they are charging their fees, they must be using this service accounting code for their professional fees, that is 998240. So with this, I'm thankful for once again to all the participants for joining me, and I am available for the question answer session, I think, which is kept at the end of the today's program. Thank you.
Thank you so much, sir. I would now request IP Sandeep Singh to express gratitude on behalf of IP Net and offer a memento to our speaker, Mr. Sushil Goel.
Thank you so much, sir, for delivering such a wonderful session, and it's an honor to learn from your experiences. So this is a small token of appreciation from IPNet team. Would request you to accept this on our behalf, and thanks.
And sir, the memento in hard copy will be delivered to you. Rajiv sir will make sure of that. Thank you so much.
Thank you. Yeah, definitely we will deliver.
Before we move ahead, I just have a small announcement to make for tomorrow. Tomorrow, Sunday, 17th August, 11 to 1, webinar on IBC Amendment Bill 2025, a detailed analysis with Dr. M.S. Sahu sir, Dr. Advocate Ashish Makhija sir, and our very own CA Udairaj Patwardhan sir. It is free for IPs. We get 1 hour CP credit on a first come, first serve basis. Udairaj sir, would you like to say a few words for tomorrow, sir?
Thank you, Namrata. We are excited about tomorrow. I don't want to, I would say, put any encouragement today itself as to what to expect tomorrow. But let us get together tomorrow. A lot of things to be discussed. I don't know whether 2 hours will be enough, but this will be a very good opportunity for all of us to discuss the major change or major, I would say, major way forward for the insolvency practice ahead, useful for all, for the practitioners, for the legal fraternity, for the IPs, for the resolution applicants, and for the economy as such. This is going to be a sea change in the insolvency world. Let us look forward to it, and we will be guided by Dr. Ashish Makhija with his expert comments on that. I will be doing the basic work of presenting the amendments, and Dr. Makhija will be providing his expert comments. Thank you.
Thank you, sir. Now I request Mr. Sandeep Singh to introduce the speaker, Mr. Ram Ratan Modi, sir.
Before I introduce Mr. Ram Ratan Modi, I would request everyone to keep your video on so that it will be an interactive session and we'll learn from this session. Mr. Ram Ratan Modi is currently practicing as an advocate at the Calcutta High Court, NCLT, NCLAT, DRT, DRAT, Commercial Court, and ITAT. He has over 3 decades of prior experience as a chartered accountant, during which he audited several Navratna companies and served as an impaneled quality reviewer with the Quality Review Board. He has successfully completed the international law and WTO course conducted by ICAI and has been a guest member of the Central Council Committee on WTO. As a guest faculty, he has been associated with the Eastern Management Institute, the Certificate of Practice course at St. Xavier's College, and ISWPM. Mr. Modi specializes in corporate matters, civil disputes, writ petitions, recovery proceedings, surface matters, testamentary cases, arbitration, and taxation. He has also served as the past president of ACAE. So, welcome, Mr. Modi. Over to you.
Thank you, Mr. Sandeep, for your so nice words of appreciation of introducing me. So, and thanks to the IPNet and the organizers for giving me this opportunity to speak for the first time on the IPNet platform. Though I am a member of the IPNet, but as a speaker, this is my first opportunity. And I have been given a very important topic. But since my earlier speaker was CA Sushil Goyal, I mean, it's my question. I will request him that during the question answer session, he should deal with the same. That is, what is the fate of the rainbow? I mean, with respect to, I mean, what is the fate of rainbow? I mean, the Supreme Court judgment, where it is standing now. So if you can throw some light, so then probably helpful. I mean, to me and to probably all the audience. But anyway, now my topic is income tax, and I will be sharing the PPT. Just give me one moment. One minute. One minute. Just. Because one minute, give me one moment. I'm just not able to connect it. Can somebody confirm the screen is visible?
Yes, yeah, it's visible.
Yeah, thank you. Well, I will start with the first sentence. I mean, the effective first sentence of Mr. Sushil Goyal. He said he started his deliberation with the word clean slate. I will also start my deliberation with a clean slate. And the first case law which he quoted, I mean, the famous apex court ruling in Ghanshyam Misra. So obviously my deliberation will be, I mean, centering around Ghanshyam Misra. I mean, one of the epic judgment, I call it. So in every resolution plan application approval by any adjudicating authority, Ghanshyam Misra finds his place. So that's it has occupied a fixed slot in any resolution plan approval slot. Anyway, so now regarding the income tax versus IBC, who is having an upper hand, Sushil ji has already clarified that IBC is.
Sir, I think you are on mute.
I'm sorry. Well, I will start with this clean slate principle and the Ghanshyam Misra, the Supreme Court judgment, which was again the starting point of Mr. Sushil Goyal also. And my entire focus will be on Ghanshyam Misra and other related case laws. The IBC, 1 minute. Yeah. Now, the IBC, who is having an upper hand, IBC or the Income Tax Act, well, section 238 of the IBC is very clear that 238 is the overriding section and it will certainly override. But still, in spite of all these clear-cut provisions, we have the several impediments from the tax authorities, whether it is the GST authorities or the income tax authorities. They, I mean, keep on giving notices or summons and disturbing the life of the insolvency professional. I mean, just in one of my case, I will just share an example that even RP was there was a search operation in one of the CD during the CIRP period, and RP was issued warrant. I mean, sort of summon to appear before them. So that was something. I mean, unthinkable. But then, I mean, what Sushilji, I mean, has already told that the GST authorities do not know much about the IBC laws. So probably these things do crop up at some point of time. So we have to be I mean, we have to be beware of these monsters. I mean, we can call it. I mean, something can jump at any point of time. So, well, IBC is an overriding act, nothing to say about it. And this have been, Supreme Court, Honorable Supreme Court in innovative judgment also have been spelled out. So, nothing more to elaborate on this point. Well, as far as if you see my last two bullets, Section 247 of the IBC Act 2016 states that the Income Tax Act 1961 shall be amended in the manner specified in the third schedule. That is what the Section 247 of the IBC says. And what is the third schedule? The third schedule stipulates that subsection 6 of Section 178, after the words "for the time being in force," the words and figures "except the provisions of the Insolvency and the Bankruptcy Code 2016." So Section 178 subsection 6, I mean, clearly says that, the section is applicable as it is, but it will be subject to the provisions of the IBC code. So that is how, this third schedule talks about. Now, Section 178 is reproduced below, but nothing much of relevance. Let me skip it because I will be more interested in deliberating on, what will be the tax impact on the assets sold during CIRP, or how to handle the tax proceeding notices, reassessment notices, or search and seizure operation, if at all, during the CIRP or the liquidation period. And obviously, tax on haircuts. I mean, whether at all there is any tax on haircuts or there is any way out. Section 79 also, set off and carry forward of losses. So I will be more focusing on that. So let me skip all these slides. These have been prepared much earlier. Short journey into the IBC. Everyone, I presume, and are equally knowledgeable in terms of this journey to IBC. So I'm not going into that. I'm just skipping all these things. Now, Section 140C. Now, this 140C is regarding the verification of the return. Now, we all know that the law is well settled that whether he is an insolvency professional in terms of IRP or RP or is a liquidator, he has to comply with the income tax laws and the GST laws. So he has to file the income tax return also, whether it is during CIRP or it is during the liquidation. So if you are filing an income tax return, then you have been authorized, the insolvency professional have been authorized to verify the returns. That is by virtue of Section 140 within bracket small c. Now, Section 140 within bracket CD. If you see, then it says about verification regarding LLP. We all know that the corporate debtor can be subjected to CIRP. The corporate debtor includes a company as well as an LLP also. So what about LLP? Who will sign the return for the LLP? Now, the language used here in Section 140 within bracket small cd is that to be verified by any of the designated partner. And then it says, or any other person as may be prescribed for the purpose. Now, where it is prescribed, the same is prescribed under rule. I presume this has been prescribed. This has been prescribed under Rule 51B. If I am correct, the same has been prescribed under Rule 51B, and there it has been mentioned that the insolvency professional will verify the return. Now, what will be the scenario? We all know that personal guarantor to the corporate debtor. Now, if they are having, who will file the return for them? Now, there is no enabling provision as far as these individuals are concerned who are undergoing insolvency, bankruptcy. So that requires an amendment. I am yet to find any suitable amendment for that. Now, Section 288 regarding the authorized representative who can appear before the department. Now, insolvency professional have been allowed, have been authorized, have been put into the category of the authorized representative, and now they can appear before the income tax department officials. Now, here Rule 51B is mentioned, so it is what I said is correct. Now, Section 79. Now, look, what is the problem? Whenever a resolution plan is approved, it is generally it is the case unless and until it is a case of a MSME unit, that the unit is taken over by someone other than the existing promoters. If the unit is taken over by someone other than existing promoters, obviously the modus operandi in almost all the cases is that shareholding is absolutely changed. I mean, there is 100% change in the shareholding. The earlier share capital in general gets extinguished, I mean, through the resolution plan, and the new set of shareholders come in. So now we all know that Section 79 of the Income Tax Act stipulates that if there is a change of more than 50, more than 50% of the shareholding, 51% of the shareholding, in that scenario, the brought forward losses will not be allowed to be carried forward and will not be available for the set-off. Now, but in insolvency, all the cases will have this situation where the shareholding has changed completely. There is 100% change. So there was an amendment in the Act on with effect from 1st of April 2020, wherein it has been allowed that in the cases which are, through IBC, through the resolution plan or through whatever it is, then this Section 79, this enabling clause is that even if there is a change in shareholding of more than 51%, carry forward and set-off of losses will be allowed to the companies which are in CD. Now, change of shareholding is allowed. Now, it is not clear whether it will apply in liquidation also. If you really see the language of Section 79, because why I'm telling you, in liquidation, many a times the company is dissolved, corporate debtor is dissolved. But sometimes the corporate debtor, even in liquidation, is sold as a going concern. So in that scenario, the question is whether they will be able to get the benefit of set-off and carry forward of losses. Now, this again remains to be seen, because there is, as far as the language is concerned, it is not a very happy language, and it's not clear from the language whether in liquidation it will be allowed or not. But let me tell you, in Gaurav Jain versus liquidator and in Nitin Jain versus Lucky Holding cases, carry forward and set up of allowances by the adjudicating authority have been allowed, subject to the approval of the authorities, means income tax authority. Now, another important point comes is regarding the book profit. Now, we all know that when we calculate the book profit as per the Income Tax Act, there is a deduction which is made from the book profit. That is by way of an adjustment. Now, what is that adjustment? That adjustment says that the accumulated cash losses or unabsorbed depreciation, both figures as per books, not as per Income Tax Act, right? So accumulated losses or unabsorbed depreciation, whichever is less, will be reduced from the book profit. Now, in most of the IBC cases, when the company has gone into CIRP, you will find that in most of the cases, either of this figure is zero. Depreciation is generally, in most of the cases, the accumulated depreciation, unclaimed depreciation is almost zero. Because, the companies is very old, the machineries are very old, and as per the income tax, as per the books, the depreciation is almost over. There is no more depreciation, or very negligible amount of the depreciation. So what happens, these companies, when these are taken over, the benefit of 115G, they are suffering tax because there are haircuts. Haircuts are again subject to the income tax because there is a remission of liability. If there is a remission of liability, that is subject to income. It is part of the taxable income, and that is subject. That is part of the book profit also. And if it is part of the book profit, and if no deduction is allowed because depreciation being at zero figure or almost at a negligible figure, then in that scenario, there is an enabling clause which have been 115 JB have been amended, and it says that you need not see which one is lower, rather both will be allowed. So in a case of IBC, the unabsorbed business losses and the unabsorbed depreciation both will be allowed when you calculate the book profit during insolvency, in the IBC cases. Now, the point of confusion here is, there is one point of confusion. It's not again a happy language. There should be a clarification from the department which is yet to come. The point is, if you see the language says in the year in which the CIRP petition is admitted, the application which is filed under Section 7, Section 9 or Section 10, if in the year it is admitted, then this provision will apply. Whatever, if suppose the CIRP is supposed to end in 180 days, but that's all in theory. It never, practically it doesn't happen. So if it crosses more than one financial year or assessment year, then what will happen? So will it apply only to the first year 115 GB benefit, this particular provision which is giving benefit, will it apply only for the first year of CIRP or will it apply to the subsequent years? Well, I keep my, I will not be able to answer this point. There is no clarity as far as the language in the statute is concerned. Now, Section 56, we all know this is a sort of a deemed income. It's a deemed income. I mean, whenever we receive anything, when any assessee receive anything without any consideration, then Section 56(2) is 56(2) subsection 10, Roman 10 is applicable. Now the question is, in through a resolution plan, the assets or even in liquidation. I mean, take the case of in CRP, what happens? Sometimes beyond the resolution plan or outside the resolution plan, the RP is selling some assets. To a certain extent, he is allowed to sell some assets. So I'm not going into that situation when he is allowed to do that. But if an RP is selling certain assets, which is allowed as per IBC, and if suppose, I mean, then in that case, the buyer and the seller, as per the Income Tax Act, if it is an immovable property, then the fair market value has to be taken into consideration. Then what will be the fair market value? Will it be the fair market value as per the Income Tax Act principles, income tax rules, or will the valuation, same situation will arise in liquidation also, or will it be the valuation which have already been conducted in the insolvency process, CRP process? We have appointed two sets of valuers. They have given their valuation, one as a fair value, another as a liquidation value. So that aspect is again not clear, that which valuation will apply here, whether they will be hit by fair market value. I mean, well, they should not be, but the language is not, again, I say it's not a happy language. So that, I mean, clarity remains, I mean, should come from the Income Tax Department. If you see there is a case, a particular ruling, Principal Director General of Income Tax Administration, appellant versus Synergy is Dorai, Automatic Limited and others. Here it has been said that the NCLT has held that Income Tax Department of the central government and the Sales Tax Department of the state government and the local authority who are entitled for dues arising out of the existing laws are operational creditor. I think this has been dealt very nicely by Mr. Sushil Goyal, and so I should not go much into it. Now, second case law is regarding, this is the Principal Commissioner of Income Tax versus Monet Ispat. This is a Supreme Court judgment, as the Supreme Court judgment, and one of the very landmark important judgment. What it says: the Apex Court upheld the decision of the Delhi High Court, which stated that moratorium under Section 14 will also apply to appeals being made by the Income Tax Department against ITAT orders during the CIRP period. Now, we all know there is a first level of appeal, CIT appeal. Second level of appeal is ITAT. Then matter can travel to the High Court also. Now, if the in between, I mean, suppose the CIT appeal is over, and in the meantime, the company has gone into CIRP, and whether the department here requires to go to the ITAT, whether the department can go to ITAT, answer is no. Because of the moratorium under Section 14, department cannot go to the ITAT, or there will be a complete stay because of the moratorium under Section 14. So this aspect is now well settled because of the Supreme Court pronouncement. Now, what will happen to the assessments proceeding? I will come. That is the subject matter in subsequent slides. Now, Section 14 of the moratorium, we all know, I need not go into detail. Now, a possible view that shall not be barred if it is a proceeding against the corporate debtor. Now, let me tell you. Suppose the question here is can there be a scrutiny notice 143(2) notice or 142(1) notice be issued by the department to the corporate debtor who is under CIRP? Now that again, it can be divided into two parts: for the period which is relating to pre-CRP period, or for the period which is under CIRP. I mean, suppose CRP is continuing for more than 1 year and you have filed a return, income tax return of for one particular assessment year of the CIRP, and that is they are issuing the notice for scrutiny. So there are two different parts of it. Now, what Delhi High Court, let us see what the Delhi High Court is saying. Delhi High Court itself in Power Grid Corporation case ruled that the moratorium provisions would apply to debt recovery actions against the corporate debtor. The assessment proceedings are only aimed at giving finality to the assessment, which per se is a preliminary step and may or may not lead to recovery against the debtor, which is what ABC actually bars. So since, I mean, in nutshell, it says that if there are, since the assessment proceedings are not recovered, they will complete the assessment, right? They cannot do any recovery. Suppose a demand is created after the assessment order has been passed, that demand cannot be recovered. But the point is whether they can carry on the assessment proceeding. Yes, they can carry on the assessment proceeding because of this Delhi High Court pronouncement. But tell me, can they carry on the assessment proceeding of a year prior to the CIRP? In my humble view, they cannot, because supposing if they are doing any assessment proceeding or any reopening proceeding or reassessment proceeding of any of the prior years, what will happen? I mean, that assuming the worst case scenario that you get a new demand. I mean, income tax demand. I mean, a new demand, or your taxable income increases and the new demand is created upon you. Again, this is a pre-CRP. Pre-CRP will be subject to the claim which has already been filed, right? So there is no point. There is no point in doing those proceedings or racking up those issues again, which are belonging to the pre-CRP period. And there are plethora of cases which I will discuss in the later slides, which very clearly says that for the period which is prior to the approval of the resolution plan, it says like this: for the period which is prior to the approval of the resolution plan, the reassessment proceedings cannot be commenced. Now I will discuss those case laws within a short while. Now, IBC 2006 section 31, approval of the resolution plan. We all know there is a clean slate principle. The clean slate word have been used by the Supreme Court, but section 31 is nothing but a clean slate principle also. That whenever a resolution plan is approved, that resolution plan is binding on everyone. If you see the underlined sentences, it is binding on the central government, it is binding on the state government, any local authority to whom the debt in respect of the payment of dues arising under any law or for the time being in force, such as the authorities to whom the statutory dues are owed, creditors, guarantors, or other stakeholders involved in the resolution plan. So it is a binding. Whatever is decided in the resolution plan, the SRA, the successful resolution applicant, will not be compelled to make any payment which is not the part of the resolution plan. If somebody says that I forgot to file a claim during the CIRP, my claim is not appearing in the resolution plan, and now please pay me this amount, nobody can do it. If any claim is not forming part of the resolution plan, which have been approved ultimately by the NCLT, then that is not required to be paid by the SRA. Now, Committee of Creditors of Isan, this again is another, there are two very important judgments. One is the Ghanshyam Misra, which propounds this theory, and another is the Isar Steel India Limited case versus Satish Gupta. This again is a very landmark judgment of our Honorable Supreme Court of India. Here, they have used the word, Hydra head popping up. Meaning thereby that there cannot be a case of Hydra head popping up for an SRA. SRA, whenever he takes a unit, he takes it with a clean slate. If he takes it with a clean slate, suddenly nobody can come up, or he cannot be given a surprise. No, you have to pay this amount of 100 crore. This was there. Since it is not part of a resolution plan, one will not pay it. Whether it is income tax dues, statutory dues, or even electricity dues. In one of my case, the state electricity board said that you have to pay my full amount. Whereas as per the resolution plan, whatever 1% or 2% was supposed to be paid, that was paid. But they did not restore the electricity on the ground that you have to pay me the full amount. Then instead of taking the matter back to the NCLT that they are not following the order of the resolution plan approved by the NCLT, he filed a writ. And there are plethora of cases of the Calcutta High Court also, which says no, nothing doing, electricity company is bound to restore the electricity connection. Now, waiver of loans. This is again the most important part of my today's deliberation. Waiver of loans, advances, debts, etc. We all know haircut is the basic soul of the resolution plan. So, I mean, because the unit has to be revived, and there are, the loans and advances, and through the process of negotiation with the COC members, this resolution plan is finally, after due deliberation, study of the feasibility, and everything, the plan is approved. Now, if a loan is waived or advance is waived, it is no doubt it is a remission of liability. We all know that two sections are very important under Income Tax Act, Section 41 and Section 28, subsection 4, Roman 4. Now, let us first take Section 41. Section 41 very clearly says that if there is a remission, I don't strictly speaking, I'm not speaking the language of the statute, I'm in a layman language, I'm just discussing that if there is a trading liability, or if there is a expenditure which have been claimed by the corporate debtor in earlier years, say before CIRP, right, which have been claimed as an expenditure or as an allowance under the Income Tax Act, and that has not actually been paid, and now that is outstanding, and there is a haircut on that account. So we call it a trading liability. So trading liability, there are two types of liability. We call it capital liability, another is trading liability. If it is a capital liability, then there is a different treatment. If it is a loan liability, then there is a different treatment. Section 41 talks about the trading liability only. And this is well settled by the Mahindra and Mahindra Limited case, famous Supreme Court judgment, so which is there on the screen. Now it says that if there is a remission of a trading liability, then it will be your income as per Section 41. Now, suppose there is a working capital loan which have been taken. So it has been now well settled that working capital loan will be treated as trading liability. And if there is a haircut in your working capital loan, say, CC facility, then that will be part of your income. That will be a part of your income because you have been granted a waiver, haircut through the resolution plan. Now, friends, here one thing you have to all notice. When, there is a haircut by the resolution plan, but when this remission is occurring after the approval of the resolution plan, first there has to be an approval of the resolution plan, then the question comes, the remission, Section 41 becomes applicable later on. The question is, when it has been waived by the NCLT, resolution plan have been approved by the NCLT, so why there should at all be a tax under Section 41? I always answer it like this, that the question of remission of liability is a post-resolution event. It's beyond IBC. It's outside IBC. So there is no conflict between the IBC and the Income Tax Act here, right? So this position has prevailed and will prevail that if there is a remission of liability, and particularly say, a trading liability, then it will be an income and it will be subject to tax. What will happen in the case of a capital liability? Capital liability, suppose there is a term loan which is given for the purpose of acquiring capital assets. So if there is a term liability or capital liability and there is a haircut, the amount have been waived, then the Mahindra and Mahindra judgment says very clearly, Supreme Court judgment, that it is not an income. Any remission here or any haircut here will not be treated as income. Now this judgment, when it was pronounced in 2018, was also applicable to Section 28. Now, what is Section 28 subsection Roman 4? Section 28 Roman 4 talks about that if in the course of your business or profession, somebody is receiving any perquisites or any incentive, in the course of business or profession, then that will be subject to tax as a business income under the head business or profession. That is what Section 28 subsection Roman 4 says about. Now earlier, the section was amended later on. But if you see the original section, it never, at that time, it was not talking about whether this perquisite or benefit have been convertible into money or not, or whether this benefit or perquisite has been received in cash or in kind or partly in cash or partly in kind. These wordings were not there in the original section. These words were inserted later on, sometime I think around 1st of April 2024, with the effect from assessment year 24-25. So now what happens? Before this amendment, if there is a if suppose there is a term liability, capital liability, and there is a waiver. If there is a waiver of the capital liability, then obviously since it was not received in cash, so it was not covered under section 28(4). It was not covered under 41 also. So if there was a capital liability remission, then it was neither covered under section 28 subsection Roman 4, neither it was covered under section 41, and it was not taxable. It was a very happy situation at that point of time. With after the amendment which was made on 1st of April 2024, now it says under section 28 subsection 4 that if these perquisites or these benefits which are received either in cash or in kind or partly in cash or partly in kind, now here we are covered by this section. So now even if there is a remission of a capital liability, it will be covered under section 28(4). Now this is very vital, this thing. So anybody who is preparing the resolution plan or is intending to buy a unit through the IBC must take care of this particular thing. Now, when waiver is done, I said this thing earlier also, when waiver is done, remission of liability happens, but it is post approval of the resolution plan. So IBC does not help here. It means it goes out of the IBC. So there is no conflict between IBC and the Income Tax Act. Section 238 of the IBC will apply when there is a conflicting provision in the other statutes. Here there is no conflicting provision. So if there is a remission of a capital liability, then it will not be taxable under section 41, but it will be taxable under section 28 subsection 4. Now, section 83 is regarding CGST, which I will not, Sushilji has already discussed. Now, capital gain on sale of assets during CIRP or liquidation. If suppose in liquidation, we can sell it as a going concern also, but if we are not selling it as a going concern, we are selling it, piecemeal basis, then whether capital gain tax has to be paid by the liquidator or not, or RP, if that be the case, then yes, answer is yes, capital gain will apply. But if suppose you are selling, the liquidator is selling an immovable property, we know there is an application of section 194(1)(a) of the Income Tax Act, which says that the TDS has to be deducted by the buyer of the immovable property. Now, here 194(1)(a) will not apply. Why? Because there will be a conflict of section 53. Section 53 says that as per waterfall mechanism, you will get the money. But if the TDS is deducted under 194(1)(a), then the department is getting the money upfront, even without CRP cost or liquidation cost being paid. So there is a direct conflict between 194(1)(a) and section 53. That is the only reason. There are two cases have been cited here. Om Prakash Agarwal versus Chief Commissioner of Income Tax and Miss Pooja Bairi versus G Ispat. In both these cases, it has been well established that no TDS is required to be deducted under section 194(1)(a). but liquidator can ask for, but suppose there is a refund which is to be receivable by the corporate debtor. Can the liquidator claim that refund from the department? Yes, very much. The liquidator can ask for the refund from the department. Another very regular feature which we find, those who practice income tax, they will find that department often gives an intimation saying that your refund of earlier year have been adjusted, your refund for the current year have been adjusted against the earlier year demand. Can the department do it when the company is in CRP? Absolute no. Absolute no. The department cannot adjust refund from the last demand. If the department has done it from the past, if the department has done it, you can approach NCLT. Now, whether rainbow will apply to the income tax, I wanted to know from Sushilji whether, what is the current status of the rainbow with respect to the GST. But as far as the income tax is concerned, I am very clear that the rainbow case, the spirit of the rainbow will not apply to the income tax demands. Why? Because rainbow, number one, rainbow is a very, very specific, I will take 2 minutes here only. Rainbow was a very, very specific case in a very special situation rendered by the Supreme Court. Even Rainbow case was turned down by a subsequent judgment of the Supreme Court of the equal strength of members. Judges were equal. I mean, 2 judges bench delivered the judgment of the Rainbow in the Supreme Court. Similarly, a subsequent judgment was also delivered in the Paschimachal Vidyut Nigam case, wherein the 2 judges bench of the Supreme Court delivered the judgment, and which was absolutely contrary to what they have earlier stated in the Rainbow. So now we have the 2 judgments of the Supreme Court. One is the Rainbow, which says that the GST liability, I mean, it was particularly in the context of the Gujarat GST liability, right? Gujarat VAT or Gujarat GST, something like that. And there in the statute, in the Gujarat GST, it was mentioned that it will be a secured liability, or GVAT, whatever it is. So it is a secured liability in the statute, it was written. So that is why it was, propounded in that particular Rainbow case, that the sell tax liability, any GST liability, since it is a secured liability as per the particular statute, so it has to stand on equal footing with the secured lenders, secured creditors. So, I mean, after the CIRP cause, they stand at step number 2, the ladder number 2, along with the secured creditor. That was what the Rainbow was saying. It created a lot of flutter all over the entire this IBC ecosystem. Then subsequently came the judgment. Of Paschimachal Vidyut Nigam. Again, equal number of judges were there. A contrary judgment. Now, which one will prevail? I mean, which judgment will prevail over which judgment? Now, in my humble view, I mean, it is not the case that the earlier subsequent judgment will prevail over the earlier judgment. I mean, whichever is, when anybody can take recourse to any of the judgment, the Supreme Court judgments are overruled by a higher judge member. If suppose, I mean, there is a subsequent judgment of a 3 judges member or even a higher strength, then that judgment will be overruling over the 2 judges, judgment. But here, since both the judgments, Rainbow and the Paschimachal, are of equal strength, so I mean, both are applicable. So if the cell tax, the GST department, they might still say that the Rainbow is applicable to us. But in a very recent judgment in one of my client, the matter went up to it was a Himachal Pradesh GST department, and which were paid through the resolution plan only 2% of the demand, I mean, whatever claim they have filed. And they filed that no, Rainbow is applicable, they have to be paid full amount. And then we fought the matter. I mean, they lost before NCLT, and then the matter NCLT Delhi, then matter traveled to the NCLAT, and there also they lost. NCLAT very categorically said that the Rainbow is not a general case, it's not applicable everywhere, it's not a general proposition of law. You have to refer to the particular statute. If that particular statute says that it is a secured liability, then only the Rainbow will apply, else the Rainbow will not apply. So this was the scenario. And in Dena Bank versus Bikram Bhai Prabhudas, this thing, and Monet Ispat case also, I mean, it said that the income tax is not a secured due. Income tax due or income tax claim is not a secured due. So if it is not a secured due, Rainbow will not apply. So that is the spirit, and Paschimachal Vidyut Nigam case I have already discussed. Then the resolution plan, sale of some assets. Now, if suppose in the resolution plan, there is a clause like this, that they will be selling certain assets in the resolution plan. They do not require all the assets when they rerun the units after the takeover. So in that case, how the capital gain will be calculated, or will there at all be any capital gain on sale of such assets, or a group of assets, or group of assets along with the liability? Now here, in my view, the slump sale principle will apply. Now, what is the slump? I mean, if you remember that the Sushilji has very categorically said that if a going concern, if a unit is sold as a going concern, then there has to be a certificate which is to be obtained from a chartered accountant or a cost accountant that all the liabilities have been taken over. Now, here I have a query. In fact, I have a query with respect to the GST law, that invariably the pre-CIRP liabilities are never taken over. These are subject to the resolution plan. Right. Even if a company is sold as a going concern in liquidation, there is a haircut in the liabilities also there. Right. So whether if those liabilities are taken out because of the IBC provisions, will it not be overriding? So how can even if a chartered accountant gives a certificate that the pre-CIRP liabilities have not been taken over, will the GST will be applicable even on that particular sale, going concern sale. This is my query. I don't know. I do not practice GST, so I cannot answer this question. But as far as income tax is concerned, if there is a provision in the resolution plan to sell some assets with or without some liability, then I think the provision of the slump sale will apply. Then tax proceeding. This again is a very important part of my today's deliberation. Now, I have already said that if there are appeal which the department wants to file from CIT appeal order to tribunal, they cannot do it. Monad Ispat, very clear. Now, if the department has already put an attachment on some assets, some bank accounts of the corporate debtor, the company has gone into CIRP, can the RP or the liquidator, whoever is there, can they ask the department to remove the attachment? Answer is yes. The department is bound to remove the attachment. Department cannot continue with the attachment. The relevant case law is Kitply versus ACIT TDS. Now, whether demands will be paid. Now, when the department issued a demand notice, invariably they say that the demand has to be paid within 30 days. That is, we all know that income tax famous demand notice, DM. Now, in case of a resolution plan, resolution applicant have stated there that these income tax demand, number one, I will pay 10% of it. And number two, this 10% or X percentage, whatever it is, X percentage I will pay on such and such dates, irrespective of the mandatory requirement as per income tax of 30 days. It is the provision or it is the stipulation which is made in the resolution plan which will be prevailing. So demand will be paid as per the resolution plan, not as per the Income Tax Act. Now, whether reassessment notices can be issued, I have written in a general way 147/148, whether it is an old law or it is a new law, or again there is a new change in the 148 scheme. So I'm not quoting those 148 A, D, B, C or all those things. In a general, whether the reassessment proceedings can be issued after a plan have been approved. Now here answer is absolute no. I have several citations. If you see the bullet number 3, that Irio 5 Prever Private Limited versus ITO is a Delhi High Court judgment. Citation is given. It has been held there that any liability other than from the resolution plan relating to a period prior to the resolution plan is bad and will not subsist, cannot subsist. So, right. So, if resolution plan, prior to a resolution plan, if any liability is related to that period, that will not subsist. That is bad in law. No demand can be raised for it. Now, in Bombay, it's not SC, it's a High Court. Bombay High Court in Principal Commissioner versus Patanjali Food Limited, 2024 161 taxman.com 675. Here it says it was held that notices issued after resolution plan is approved is bad in law. Then again, similar judgment by the Gujarat, I've wrongly written Supreme Court, it will be High Court. Gujarat High Court in Surya Exim Limited versus Union of India, it says that a continuing, not containing, it's a typo error, a continuing proceeding which is not part of the claim, which are mentioned in the resolution plan will be an invalid proceeding. Suppose there was a proceeding which was going on before the resolution plan was approved, right? Now, after that resolution plan have been approved and it is not forming part, and by that time the demand was not crystallized and the resolution plan, it is not forming part of the resolution plan, then any demand on account of that proceeding, right, will be bad in law. It will be invalid demand. Now, whether SR is liable for the undecided claims, we all know Isar Steel is there, Ghanshyam Misra is there, right? So very categorically, they have said that the Hydra head monster, cannot pop up. So all these words have been used. So this concept is now very clear. Second bullet I am reading, whether demand notice can be issued to new management under IBC, answer is absolute no. Delhi High Court is National Sewing Thread Company Limited versus the Deputy Commissioner of Income Tax. Now, whether proceeding could be initiated against corporate debtor, Calcutta High Court says, since we all are from Calcutta, so we look for the Calcutta High Court judgment. Here it says Kohinoor Steel Private Limited versus ITO 2024 159 taxman.com 571. It has been held there that when company is in CIRP, no proceeding could be initiated. So that's a beautiful judgment of the Calcutta High Court, which should be referred when one comes across with such a situation. Principal Chief Commissioner versus Subh Labh Steels Private Limited. Again, this is again the judgment of the Calcutta High Court on the same line. So, friend, now coming to a few other points which I would like to discuss is regarding how do you pass the, because everything income tax is based on your account books. Now, after a resolution plan have been approved, how the SRA will pass the entry in his books of account, because he has taken over the corporate data, how the entries will be passed in the books of accounts. Here, every RP gets confused, or the SRA accountant gets confused. Many times I receive a call from many chartered accountants, how to pass an entry, what should be the suitable disclosure. Now, liabilities, there is a haircut. And as far as assets are concerned, assets are obviously overvalued in the books. So they, as they make a realistic estimates about, okay, these are the assets, values are recasted. So assets values are recasted, liabilities values are recasted, and then you get a net difference. Now, what most of the chartered accountants, while doing their audit or suggesting their clients, what they were doing, they were passing a single entry in the capital reserve account, either for the profit or loss, whatever, it depends, right? For this difference of asset, recasted figure of assets and liabilities, whatever assets and liabilities. This is wrong. This treatment cannot be done as per expert advisory opinion of our own institute, and as per Ind AS 109. Ind AS 109 very categorically states that if there is a waiver of liability, if a liability is distinguished, that any profit arising therefrom has to be disclosed separately. And that is exactly the view of the expert advisory committee also of our own institute. So every chartered accountant is bound by those views. So this has to be observed, that you should not net off and pass a single entry with a capital reserve account. Now, another thing, we all know there are provisions of GAR, anti-avoidance, general anti-avoidance rules have come long back into force. Now GAR says that any arrangement which reduces tax, sort of, language is something like this. So that is invalid. That cannot be taken cognizance. That's what the GAR says. Now, a resolution plan is obviously, resolution plan, there is a haircut in the resolution plan. So is it against GAR? So answer here is, the department, when the GAR was issued, there was a clarification CBDT circular of 2017, which was issued on 27th of January 2017, and it was in a question answer format. Question number 8 of that particular circular, that is the circular number 7 of 2017. Question number 8 was, I just read the question, whether will GAR apply if arrangement is sanctioned by the authorities such as court or national company law tribunal, or is in accordance with judicial precedents, whether the GAR will apply or not. The answer to that has been given by the CBDT itself. It says that where the court has explicitly, the word used is explicitly, so here it is a bone of contention. There could litigation arise here also, where the courts has explicitly and adequately considered the implications which while sanctioning an arrangement scheme, then the GAR will not apply. So what is the conditionality given in the answer? Explicitly and adequately. When the NCLT is passing an order, invariably in 99.9, and I have not come across any order where there is a clean allowance by the NCLT, they say that you can approach the relevant authorities for the particular relief. If they may deem appropriate, they might allow it. That is the language invariably. You will find in all the NCLT orders approving the resolution plan. So can you say that this is an explicit and adequate expression or approval of arrangement? So the question might come, department might come up with this issue later on. It might travel to the higher courts. So friends, I think this is all about my deliberation. If anybody has any query, I'm open to the question answer.
Thank you, Mr. Modi, for a wonderful deliberation. Friends, now it is open for question and answer session. First, let us take some questions remain unanswered. Although Mr. Goyal has replied all the queries at the time of his deliberation only, but I think one or two queries has remained unanswered. I'll request Mr. Goyal to address that. For his convenience, I'll say one Mr. K.V. Rao has said, what will happen if there is a replacement of IRP, RP, whether new registration is to be taken or existing can continue.
Thank you, Mahesh, for joining in, and definitely the same registration may continue because the IRP, whoever changed, they are not attached to any personal responsibility. And this is anyway, they have taken a new registration, as I understand. So they can, the same registration may be continued, they change the authorized signatory only. Because the liability of that period will be assessed together. It is not assessed as per IRP or RP basis. It will be assessed CRP period or pre-CRP period or post-CRP period. So same registration may continue, change of signatory is required to be done.
Yes, I agree. The same registration should continue. They should not take any new registration. Second query was from Vaisali Patrika. What she is asking, if after selling all assets in liquidation, there is a balance in ITC, whether ITC balance can be refunded.
If you are selling all assets separately, means you are in under liquidation, not as a going concern you are transferring, then whatever ITC remains, it will be left. My department is not allowing us to refund, and no provision in law permit us to take the refund also. So although in few very one or two cases, people are trying to get the refund, file the refund claim, but I am not very much convinced. If you ask me personally, I am not very much convinced with the idea of grant of refund in these type of cases, because GST law nowhere contain any provision through which you can get the refund.
Yes, sure, I agree. Is certainly good. Question one, Mr. Modi's query rather.
Sir, do you want me to take the questions which is raised by Mr. Modi during his deliberation? He posted few questions on me. That is, one is the rainbow judgment.
Yes.
He wanted to know what will be the fate of the rainbow judgment. I just want to my understanding so far, that it was related to Gujarat VAT. The rainbow judgment which was delivered, it is related in relation to Gujarat VAT, and the provision in Gujarat VAT is differently worded than the provision in the GST law. So as far as so far my understanding, if some demand is there from the Gujarat VAT law, then they will supersede. The rainbow will come into the play. Otherwise, for GST law, rainbow is not coming into the picture, and we can continue. IBC is superseding. And second thing, this liability, regarding the takeover of the liabilities, basically once this plan has been approved by the NCLT, I think earlier period liability all get extinguished. It is not remain the liability of the company anymore. So they get extinguished. Only the law, which is section 18(3), through which this transfer of assets has been taken place, they specifically says that there will be there must be a condition through which the transfer of liability must be there. So usually we are taking a certificate that this unit which is getting transferred, whatever liability is there, and we are attaching a trial balance along with that. In the trial balance, we show that there is no liability, or we show as a liability to be payable to the company, the basically RP or IRP, whatever consideration they are going to pay for this takeover of this unit, they show as a liability. So that will be paid by them. And there is zero liability, you can say that, because they are not saying that quantify the liability. They say liability attached to these particular assets. Whatever the going concern is getting transferred, if some liability is remain there to these assets, that is also taken over. So they cannot take over only assets. They should take, if it is a sale of going concern. So they should also take the liability, if any. Basically, we should read it, although the word has not been there in the section 18.3 or the schedule 2. It is not mentioned if any, but we should understand it if any, like kind of things. And moreover, regarding the ITC 02, I must confirm that Rule 41 specifically requires, which says the registered person shall in the event of sales, blah, 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 change in ownership of the business for any reason, furnish the detail of sale, merger, amalgamation, lease, transfer of business in form GST ITC 02. This is a form which is mandatory to be filed. And further, they says the chartered accountant or cost accountant certificate must be attached to it, and confirming that certified issued by practicing chartered accountant, cost accountant, certifying that the sale, merger, demerger, amalgamation, lease, or transfer of business has been done with a specific provision for transfer of liability. So this is the second rule. Rule 41.2 says that the certificate must be attached. And this ITC 02 must transfer the unutilized credit also. Basically, this form is meant for transfer of credit, but whenever there is a zero credit, people are not filing it. That only I wanted to warn all my participants that in case of sale of going concern, ITC 02 is a must form. And along with ITC 02, chartered accountant certificate is also must. And there is no limit prescribed that 2 lakh or 5 lakh will be the value to be there. So for whatever be the amount, chartered account certificate should be attached to that. And all my viewers, one more things, I think most of them are chartered accountant also. So they are issuing certificate in this, not in particular case. In other case, if they are issuing the certificates, please go to the institute portal, that is the idtc.ici.org. They have given a guidance note on CA certificate to be issued. What are the requirement? What are the compliance that which they should do? And what is the language of the certificate? The certificate draft format of the certificate is also available on this publication, and anybody can download from the portal. So thank you very much. If any other more questions participant have in their mind, I'm here to answer. Otherwise, over back to my.
Mr. Goel, one Mr. Rajan Agarwal has just posted that can the new management continue GST registration taken by RP. Mr. Rajan, Mr. Goel has already clarified this, so we are not taking it again. He has said that you can continue with the change in authority. Priyanka, Ajit Saria, do you want?
Sir, I have a question for Mr. Modi. Good evening, Mr. Modi. In terms of remission of liability, Section 28 and Section 41. So so far as I understand, the SRA is coming with a new slate. So for him, whatever he's buying, there is no remission of liability or capital receipt, whatever, because he's taking, let's say there is a liability which was standing at 100 rupees. He's acquiring it at 1 rupees. For him, 1 rupee remains, which means that the CD is liable for that 99 rupees. In which case, how does one pass this entry and how does one account for in the income tax proceeding?
Well, Priyanka ji, thank you very much. I always find that your queries are very interesting. Sometimes,
Thank you, sir.
of the webinars also we have been talking, and your queries are always interesting. This again is an interesting point. The point is when through a resolution plan, a company is taken over. What is as a going, obviously it's a running unit which is taken over. Going concern is maintained there. So how it is taken over? The company remains the same company, only the shareholding changes, only the management changes. So the liability which was there 100 rupee earlier will remain 100 rupees unless and until you recast the figure and say it is 1. So how do you do it 1? You have to reduce it and write back and then put that figure into profit. 99 has to go to the profit. So that is why I said that remission of liability is a post approval of resolution plan event. I mean, this comes after the resolution plan is approved. So it is not in conflict with IBC. You cannot say that IBC will override my resolution plan has been approved by the NCLT. So no remission will suffer any tax. You cannot say that. Income Tax Act is very valid there, and it is subsisting, and the liability will be taxable. So 99 rupees haircut, if it is on account of trading liability, then it will be taxable under section 41. If it is a capital liability, it will be taxable under section 28(4). But deduction under section 194R will not be there, because we know that is regarding one-time settlement. So that will not be there because of the specific circular issued by the CBDT, which says that no financial institution will be required to deduct any TDS under section 194R for any one-time settlement. But your income will be suffering tax. And how do you manage your resolution plan? That you have to think the other ways.
तो इसको कैसे इसको हैंडल किया
ये
जाए?
तो बहुत ही $1 million क्वेश्चन है, जो सारे रेजोल्यूशन प्लान में ये सबका है, सबकी इंडिविजुअल पिक्युलरिटी है। कैसे उसको ये कंसीडर करना पड़ेगा कि टैक्स डिपार्टमेंट की ये लायबिलिटी आ रही है। लॉफुली आप इसको कैसे, अनलॉफुली आप कर नहीं सकते, लॉफुली आप इसको कैसे इवेट करेंगे? आंसर इज वेरी लिमिटेड। आई मीन आंसर इज
Okay, Mr. Modi, there are few more questions for you. One from Mr. Rasik Singhania. He is wanting to know what precaution you should take to avoid section 28(4) while preparation of
That is what madam was asking. No, madam was asking the same thing कि प्लान में ऐसा क्या मैजिक स्टिक डाल दे हैं कि इनकम टैक्स डिपार्टमेंट हमसे टैक्स ले ही नहीं सके। तो वो तो बड़ी खतरनाक चीज है। मैंने वो तो बड़ी खतरनाक चीज है।
So we move to next question.
I can only discuss the law points. I mean, how others are doing. I mean, let us not discuss those things.
Okay, move to next question. Modilal Pamecha is saying what is the status of the summon issued under 131(1)(a) to appear in person to RP, COC, SRA, and suspended director even after approval of plan. I don't know whether it is happening.
If it is with respect to the proceeding of a year prior to the approval plan period, right? Plan have been approved today. If it is prior to that, any period covering that, if the proceedings are going ahead, that is absolutely bad in law. This is now ample clear. There are not one, there are multiple cases, including of Calcutta High Court in Koinur State. So you have to challenge it. I mean, well, department can do anything. Because department.
I elaborate this. What is the point is that the summon have been issued by the income tax department to me only, because I am the RP and my plan has been approved, and the period they are covering some part of the CRP and some is prior to CRP period.
But before the resolution plan.
Yeah.
A period earlier to prior to the resolution plan.
The period is some part is in the CRP period and some part is prior to resolution plan. The summon have been issued to the RP, the COC and SRA and the suspended board to appear in person. Otherwise, some personal liability of 10,000, 50,000 will be levied if there is no personal hearing happen. Now the question arises: even though I appear or the COC or other may also be appear, but what is the status of this proceeding?
No, they cannot. Number one, I mean, you are a court officer. Number one, though, I mean, you have been given the authority to verify the return. You have been included in the definition of the authorized person who can appear before the department. But the question of issuing a summon against an RP is something very serious. I mean, I tell you, I strongly oppose that particular move. Why the summon will be issued against an RP? I am simply conducting a process. The summons should not be issued against me. It can be, I mean, any other company it can be in the name of SBOD. Yes, it can be. I mean, there is no denial of the fact. But the fact is, if summon is otherwise valid, I mean, it is, I mean, considering the other case laws, then the summon cannot be issued in the name of the RP. That is absolutely wrong. How the RP can be asked to appear before them? I mean, summon or warrant. I mean, suppose, I mean, this cannot be issued. I mean, so there is a search and seizure. So they are issuing a search warrant to all the employees, managers, GMs, managing directors, erstwhile directors.
In that case, I think I need to apply to the NCLT to quash the summon.
Absolutely, or straightway go to the High Court. Now, why do you go to NCLT? Straightway file a writ, and you will get a judgment in a
Okay.
I mean, because
Okay.
they, even if you go to NCLT, they will go to NCLAT and it will take a long time. By that time, your term will be over and you have suffered all the harassment. You
The
have
term is
suffered all the
already over.
harassment.
On the approval of plan, the term is already over. Duty, RP is discharged from his
That's
duty.
what I'm saying. No, that's what I'm saying. So straight we go to the High Court. File a writ. Writ hearings are generally, fast, so you can get a relief, quick relief. That's my personal view. But else, well, you can go to NCLT also. I mean, I don't say that you cannot, because if there is an alternate remedy available, the court generally say, why have you come for the writ? Because
Yes.
writ is only available when the alternate remedy is not available. But here in case of IBC, let me tell you, if you read the Ghanshyam Misra case, there also one of the point was, if there is alternate remedy available, can somebody approach in IBC writ remedy? I mean writ court. So it says Ghanshyam Misra says yes. I mean, why should you approach NCLT and if I mean there is a patent violation of law or procedure, then state will go to, so that Ghanshyam Misra is authorizing as far as the IBC is concerned.
Okay. Thank you.
Thank you, Mr. Modi. Now, Mr. Adarsh Sharma has one question. If the plan converts all loans into CCPS, convertible to non-dividend equity shares and without coupon, will it be treated as remission?
देखिए महेश जी, जो प्रियंका जी ने जो क्वेश्चन किया, ये उसका आंसर है। मैं बता रहा हूँ। मैं तो बोलना नहीं चाह रहा था, मैं प्लेटफॉर्म पे ऐसा नहीं बोलता, मैं ये सब प्लेटफॉर्म पर नहीं बोलता। इस तरह की बहुत सारी प्लानिंग मार्केट में चल रही है, तो ठीक है, अब आप सक्सेसफुल है, करते रहिए सर, मैं क्या बोलूँ। आई विल ऑफर नो कमेंट। भाई आपका रेमिशन तो कुछ हुआ नहीं, बट एक्चुअली व्हाट इज हैपनिंग इन दिस केस, देयर इज नो रेमिशन। आपने क्या किया, 100 रुपए, देयर वाज 100 रुपी लोन, यू हैव सेटल्ड इट फॉर 1 रुपी, 99 is a haircut. So what you did in your books, 99 you gave them CCPS. Now what will you do after 1 year or after this thing, whatever, I mean certain after a certain period, you will sort of cancel the shares also, I mean later on, I mean through a proper merger or this particular scheme. So everything will go out. Now the tax department is aware of that. In one of the case I have heard tax department forcibly arguing this even plan in the resolution plan, which is containing, they say that this is not a true I mean in the true spirit. So anyway, but if you have done it, so okay, I mean I state with there is no, I mean no yes or no, I mean I don't say yes, I don't say no. I just keep my mouth shut.
Okay, next Vaishali has again some question to requesting re-explaining the carry forward losses benefit available to SRA in CIRP or to sale of CD as a going concern in liquidation, whether this benefit is allowed by IT department.
Now, as far as liquidation is concerned, section 79 I very clearly stated the word liquidation is not appearing in the section, but going by the spirit that should be allowed. Right. This is my specific answer, but there should be clarity in the law. This is one point. But as far as, I mean, there are two types of question. There can be two nature of question here. One is if you have filed, if you have not, if before CIRP, the company, the corporate debtor has not filed its return within due date, then what will happen to those, if there are losses in those years, what will happen to those losses, number one. Or if those have been filed on time, but during CIRP, the RP has not filed any return. And because the RP has not filed a return within say a particular 1 year return, RP has not filed, you cannot claim the brought forward losses of the earlier years. So what will be the situation here? Whether the SRA will get the advantage of those brought forward losses or not? Answer is income tax law will prevail. Section, if there is a change in shareholding, well, section 79 income tax law itself allows you that brought forward losses set off can be claimed. But if it is due to the non-filing of a return within the due date and your claim for carry forward of loss has expired, I mean you could not claim it, then well, I mean this again is not in the true spirit of the IBC. The government should reconsider this particular thing and should come out with the amendment. That will be, I will say, I will suggest this thing to the CBDT that please come out with this particular amendment. But right now, the law as it stands now, well, if the return has not been filed within the due date, and then you cannot claim those brought forward losses.
Thank you, Mr. Modi. I believe there are no more questions remain. As a last one or two questions, if anybody has either with Mr. Modi or with
Sir,
Mr. Sushil.
I want to tell this, few people were having doubt whether this advocate fees, the company is liable to pay, this IRP or RP is liable to pay under reverse charge. Basically, this exemption has been provided from liability of the advocate fees in reverse charge. A business entity with aggregate turnover up to such amount in the preceding financial year as make it eligible for exemption from registration under the CGST Act. So if you are eligible for exemption under CGST Act, then you are not liable to pay tax under reverse charge on advocate fees. That is only for advocate services, not for other services. RCM liability will not be there on advocate. So because it is in case of IRP or RP, advocate fees is a must to spend money on that. So we can take the benefit of it. So I thought must tell you to be serial number 45B and 45C of notification 12/2017, dated 20th June to the 28th June 2017. If somebody want to refer it, he will find the reference there. Thank you, sir.
Thank you. Thank you,
So
Mr.
can I ask a question in response to an earlier answer Mr. Modi gave to my question, if time permits?
Okay,
Yeah.
it will be a last question because we
Yeah.
have
So, Mr. Modi, actually, if, for example, the carry forward of losses are not permitted, would the remission of a loan not be treated as capital still? Because despite the fact that it was a revenue in nature and it was an expense in nature, the loss carry forward has not been permitted. And I'm asking it more particularly in the context of the fact that there are 5 to 6 years that the time elapses between an account becoming an NPA and the account getting resolved in an IBC process. There is no methodology whereby a resolution applicant, or for that matter, anybody, even the RP, while he's holding the process, can actually take use of the benefits of those losses and set it off against their potential income. So effectively, is it not a structure where it is somewhat deemed capital and not covered under 41 as also 28(4)?
You are absolutely right, Mr. Others. I mean, you are that on the one end, the remission is becoming taxable, but on the other end, because of the fact that the NPA is taking time, then the process of IBC is taking time, records are not available, and the losses are cannot be written, could not be filed on time. Losses are not allowed. I'm not allowed to be brought forward and set off. So in that scenario, yes, it's a very critical situation. But then, well, the government should realize it. I mean, there should be proper representation, and the government should realize it. Probably they will listen. I mean, sooner or later. I mean, earlier they have come out with a suggestion. Now, probably again, if more suggestions are made to them, they might come out. But well, as the law stands today, we are. I mean, there is no answer to it. I mean, answer in the sense. I mean, the answer is yes. Losses will not be allowed, and remission will be taxable. That's the only answer.
Thank you.
Thank you, Mr. Modi. I think we are overshooting the time. So let us close the question answer. I am very thankful. What we understand, it was a very wonderful discussion, both by Mr. Goyal and Mr. Modi. Many queries, many doubts have been cleared, but still, I feel there are still gray areas, and I believe both GST law and income tax law has to be amended to give immune to IBC cases very clearly, so that this all disputes, court cases doesn't arise, and RPs are also very clear, SRAs are clear how to work. Secondly, the training of the, I feel, IT departments, officers and GST officers are must, because many a times we find that they don't understand and they treat the IBC cases as a regular one, and we have to explain to them very rigorously and thoroughly. Even for, say, example, GST registration, many times there are many questions. The companies are very old. Sometimes we don't get certificate of registration. Sometimes registered office address. So all these problems are faced in some states. I will not say every state, but many states these problems comes and registration gets long time. So I feel there should be a very clear guideline for GST new registration by RP, where they should allow the registered office of RP as a registered office of CD for the CIRP period or liquidation period. After that, it can be changed to SRA address. And similarly, tax laws, still many areas are there, gray areas, although we have covered very nicely, but we have to see how it can be covered. With these remarks, I conclude this session and thank you very much, both the speakers. I hand over to Mrs. Tina Saraswat for announcing the next webinar on IPNet.
Tina is out of town today, so I'll be doing the announcement for Tina. Next webinar, of course, first thing is tomorrow morning, 11 o'clock. Looking forward to see all of you. And next Saturday, 23rd August, she shared the topic, very interesting, thriving under pressure, developing resilience and soft skills for CIRP and IBC success. That will be our next IPNet webinar on next Saturday. With this, now I'd request IP Sandeep Singh to express gratitude on behalf of IPNet and offer memento to our speaker, Mr. Ram Ratan Modi.
Modi sir, on behalf of IPNet community, I would request you to accept this memento, token of appreciation, and the hard copy of the appreciation would be delivered to your office by early next week. It was such an intriguing session from both the speakers, and we learned a lot actually, and looking forward for many more sessions in the days to come. Thank you.
Welcome. Thank you very much.
And also our moderator, IP Maheshan Gupta, memento.
Mahesh sir, this is a small memento for you for taking all the questions from the participants and getting all answers from the speakers also. So, and the hard copy of the memento will be couriered to your office by early next week. Thank you once again from the IPNet team.
Good evening, everyone. It is both an honor and a privilege to deliver the vote of thanks on this special occasion. On behalf of the organizing team and the entire IPNet community, I extend my heartfelt gratitude to each and everyone who has contributed to making today's webinar a success. First and foremost, our deepest thanks to our two eminent lead speakers, C.A. Sushil Goyal, ex-Central Council member of ICI, and Mr. Ram Ratan Modi, Insolvency Professional. Your insightful presentation and rich perspectives have not only enriched us, but also meaningful discussion. We are truly grateful for the depth, clarity, and inspiration you have brought to this platform. A special word of appreciation to our President, Mr. Ashish Makiza. Your vision, guidance, and unwavering commitment continue to inspire to this community. We also extend our thanks to Mr. Maheshan Gupta, today's coordinator, for his skillful moderation and valuable observation, which added structure and depth to the proceedings. Our gratitude to Ms. Namrata Eranderi, our gracious and anchor, for conducting the session with clarity and spirit. A big thank to transition team and our technical support team for working behind the scene to ensure everything run seamless. And finally, to our participants, your active involvement and made this session truly impactful. Today's webinar has been more than just an event. It has been another step forward in our shared journey of continuous learning, deeper collaboration, and professional excellence in the field of insolvency practice. Thank you once again.